And they will tell you, I can't even afford a 5K account. And I'm not trying to discriminate anyone or to talk out of ignorance. But do you really think if you have self-drive and you're a good trader, do you really think you can lack to get a 5K account starts from $29, $39 in some companies?
Exactly.
And you don't need to get it today.
Many will be called if you are chosen. By the end of the day, the people who can do trading for a living are a minute percentage of people. And those people are not only driven, like he's saying, they're passionate and they're desperate.
Yes.
It's what Napoleon says. Reach the other side and do what? Burn the ships. Yeah. There's no going back. We're not crossing back that river. If it's either we die, don't get me wrong. It's not like now you don't have an option. But
that's the best analogy. Burn the ships. So hello traders, welcome back to another episode of the Traders Show. So you guys have been asking for a guest, specifically Rick, and we decided to bring him back for another episode, or rather doing a part 2 to just share what's been happening in the trading scene, what's been happening in our personal trading, and different highlights that are going on, future plans, and what we can do together. So we decided to bring him back on the show. He's joined us for the show. I'll give him a chance to introduce himself. But I think you guys will have a lot to learn. The last time we had him, we had a very wonderful episode. You guys really enjoyed the episode, and that's why we're doing the second episode. Hope you guys will learn a thing or two from the episode, and I'll allow my co-host to introduce himself.
Yeah, guys, so welcome back. Like my partner said, the most anticipated trader you enjoyed, was it last year?
Yeah, last year.
Is back. And most of you have been asking, where's Rick? Bring Rick back. And we finally got him back, and we want to do another good episode. Last time, I remember we didn't finish. We had to cut it. We couldn't take 4 hours talking about trading. But Rick is back. Today we'll talk about more deeper stuff, trading approaches and different stuff that I'm sure most of you are looking forward to. If you haven't watched that episode, go look for it. We did, I don't remember what number episode it was, but just look for Rick the Trader, the Traders Show, Rick the Trader. I'm sure you'll get it. Get to know Rick's background, how he got into trading, because we won't talk about those ones today. We already have that. And basically his journey into the Forex journey. And now today we want to get into other stuff. So, karibu Rick.
Yeah, thank you. I'm glad to be back. Rick the Trader here. Last time we did an amazing podcast. I think the feedback was great. I also got many people, texting me and DMing me from the podcast we did. Until date, I still met people telling me, I saw you on the podcast, and because of that, maybe it inspired me, specifically because I shared my trading journey. And I think many people relate to that. So looking forward to this one.
Okay, so karibu. And like Anna said, we are trying to focus on bringing more traders, and the reason we are looking for them, and also if some also give us hints on the description, is because we try and look for experienced, good traders. We don't want to bring any trader. Okay, so we do that filter for you, and then we bring you the best of the best. But apart from that, let's get into the Forex. So maybe before I start, I just want to know one question. I have many questions, but just remind me, Konuna Jita Clinic?
Clinic, not clinic, clinical FX, right? So I said clinical,
FX, yes.
Yeah, clinical has got to do with accuracy, precision, trying to be as exact as possible. Any football fan, they know when a striker is about to finish, they say, maybe the striker is clinical. Meaning they were just, very accurate in their finishing, etc. So clinical is just because I'm trying to replicate the same in my trading. Perfect execution, less errors, basically.
So are you clinical?
Yes. Yeah, I'm clinical in my execution, I'd say. I mean, as a human, of course, you'll make a few errors in your trades, in execution. Maybe a couple of emotional errors once in a while. But I'd say I'm clinical. That's why I've been able to, grow in my trading journey so far.
Okay.
Yes.
So jump into my first question. A lot has changed since, maybe not too much, but of course growth and change has been there. We see Squeeze gym. If people look and see the...
yeah.
So tell us that journey. What has really changed? Your trading, your personal life. We've been seeing you posting on your personal page, showing people more content, not just trading. How's trading journey as Rick and trading been so far since we last talked?
Since we last talked, a lot has happened. From a trading perspective, obviously, in trading you learn every day. So from a trading perspective, I've been focusing to sharpen my edge in the markets, trying to diversify, trying to, study other markets and just see how I can grow so that I don't find myself stagnant at the same place, or rather I don't find myself being comfortable, just because I have a working system. So I've been trying to adjust a few things with my system, trying to study new markets and just diversify my trading approach overall.
You still focus on CAD JPY.
I'd
primary-
say I trade yen pairs a lot.
Okay, yen.
Yeah, mostly CAD JPY and USD JPY, sometimes Euro JPY, but yen pairs are working well for me so far. So that's what has been happening in terms of trading. Also been able to scale up capital a little. When I was here, I was taking a couple of challenges. Last year, managed to pass a couple of challenges. Got my, funds into 6 figures in terms of prop firms. Done a lot of consistent payouts. So from a trading perspective, a lot has been going on well. And of course, it reflects in your personal life because,
we can see.
Yes. Yeah, because, you'll start to live better, you're able to do many things when you have way more resources than before. So I can say everything is going on well so far in my trading. I'm very glad. I can say the whole of maybe last year and the other year, I've been at a place where I'm now seeing those fruits of being consistent in the market for years, not giving up, putting in the hard work, the sleepless nights, collecting that data. Those uncomfortable things that, I did in my first 2, 3, 4 years, because currently I'm in year 7 in trading. So those uncomfortable things, I think it's when I'm seeing a lot of, the results of that. Not in terms of necessarily even just, making profit from the markets, but even just being stable, in terms of psychology, understanding what you are really doing, because it's those things that eventually will now assist you to make that profit, okay? Yep.
And does that improvement of, or not improvement, rather change of lifestyle, like now you're doing gym and all that, does it reflect with how you trade? Is it making you a better person? Before we go into trading stuff,
Yes.
In a personal Rick life,
Yes.
your outside life, is it reflecting and helping you improve your trading? Or vice versa, is your trading helping you improve on doing your own personal stuff?
Actually, by the time you become a good trader, meaning you've gone through all those phases of, the ups and downs, and you get to a place where trading has clicked for you, most of the time already it will have shaped your character. That's why you'll find most traders are very disciplined. They have some principles in their lives. Because if you're someone who has no principles, you almost even can't be a successful trader. Because it requires you that discipline to look at the markets even when, you're losing consistently. Come back tomorrow and, maybe last week was a bad week in the markets. Those are things which you don't notice in your process. But by the time you're becoming a good trader, generally, trading reflects in your life as well. Because you start to become more disciplined, more principled in the things you are doing. And I've learned so many lessons in trading which I find myself applying in real life. For example, it took me a long time to become a successful trader, or let's say get to a point where things were working. So maybe one of the things that I've learned from trading is when you start something, you just need to give it time and keep doing the right thing, or keep following the right process and the right approach. And eventually things will just start to, work out and make sense. So yes, trading reflects in my personal life. That's what I can say. Yeah.
What are some of the principles that you have learned? From what you've just defined, it's clear you have updated some of the views that you had. So what are some of these principles that you think you have factored in?
From my trading journey?
Yeah, from your trading journey, from even your personal life.
Yes.
Something that, I like what you've said. You've learned that, things take time. As long as you're following the process, it will click. So what other principles in line with trading and probably what you're doing personally?
Yeah, so I'd say that's the biggest one so far, whereby as long as you're following the right approach and you're doing the right thing and you're putting in the work, just keep being consistent. You can't really see that exact breakthrough or that exact breaking point where you'll start to, progress. But then trust you, it's just coming as long as you're putting in the work. So that's maybe the biggest principle. Something else I've learned is the idea of listening to those who've gone ahead of you. So I think in trading, in my first 2-3 years, for me, it took me about 3 to 4 years to even start to become very consistent. And I don't mean making profit here and there. I mean really consistent. You can make a living from the markets. You have an edge. Your psychology is very stable. It took me about 4 years. But then if I look back, the reason why it took longer, it's because I also took longer to start implementing the right things. So one thing I've learned is when I was in my first year, I mean, I'd watch YouTube videos of traders who are doing better than me. They talk of these things like journal, collect data, but then, I just throw them out of the window. I didn't, give them so much attention. So I wanted to try my own way, thinking I'd find, some shortcut. But then eventually, as a successful trader right now, it all points back to the that specific time when I decided I'm now, going to start listening and following the approaches of those who've gone ahead of me. So that's a very huge principle in my life, because I feel like any field I'd want to get into right now, I'd rather even have a mentor. And by a mentor, I just mean someone who's gone ahead of me. A mentor can be someone online, on Instagram or on YouTube. Doesn't have to be a physical someone you meet in person. So let's say I want to get into a new field. The lesson I've learned is I don't have to go through the whole 4 or 5 years making mistakes for me to discover this is the right approach. I'd rather find someone, even if it's just online, who I can watch, who clearly I can see they have the results that I desire. So then it means if I listen to them, of course, you can filter a few things and, you don't have to copy paste. But if I try to follow people who've gone ahead of me, I've come to figure out that it really will cut the process short, and you'll avoid making the same errors that those guys, made. So I think maybe those are the two biggest principles I've learned, and obviously something like patience, something like discipline. Those are some of the things that I've learned, from the market.
The moment you've all been waiting for is finally here. We've partnered with Pepperstone, one of the world's leading Forex brokers, my personal best, to bring you an exclusive opportunity. And trust us, you won't want to miss out on this. We're giving you the chance to learn Forex for free at Financial Hub, but there's a little twist to it. All you need to do is find your Pepperstone account, and boom, you're all in. Deposit $100 and get access to our basic course, perfect for beginners. Or deposit $250 and get access to our exclusive course that is best for advanced traders. Why is this huge? Because you get to learn while you earn. Trade the real money and get real experience. And also you get lifetime access. Once you're in, you're in. Sign up for our Pepperstone Forex account using the link below. Deposit your $100 for the basic course and $250 for the advanced course. Send us proof and get instant access to your course. So you're ready to level up? Click the link in our bio and get started. And in terms of mentorship, do you see it reflecting with your community at Clinical FX as you mentor them?
Yeah, I see that, because you see, when you get traders joining a community, it's easier because, again, I always say, mentorship is not a shortcut necessarily. It just assists you to avoid, repeating the same mistakes that someone else did. So obviously, through even the community, you see traders who are now doing well. You see them being able to. I'll give you an example. You see, when you start trading, by yourself, you can start by blowing 10 accounts. But when maybe you're in the community, through the guidance that I'm giving, you most likely won't start by blowing accounts, something like that. So I can say I see that in their trading, because they're learning and they're growing. And I preach a lot of independence in trading. I don't like to spoon feed anyone, because I think you literally can't even do that. Even if you think you want to spoon feed someone to become a successful trader, if you look at it realistically, it won't work. So personally, I preach a lot of independence. You get to a point where you know what you're doing for yourself. You find your own rhythm in the market for yourself. And whether Rick is here or not, whether your mentor is here or not, you have an understanding of what you're doing in the market. Like a good example, no one, pushes me to be disciplined in the market. I do all those things from within. No one pushes me to collect that. I do all those things from within. So that's the whole idea of the community. And I can say I'm seeing that progress in the traders who are there as well.
And for you as Rick, what pushes you?
What pushes me?
What makes you at the end of the day be disciplined? We aren't born with discipline.
Yeah, true.
We can't say our parents taught us to be disciplined in trading. In this trading field, what made you disciplined?
I'd say mine comes from experience. I think I mentioned this last time.
Pain.
Yes, exactly. That's
experience is pain.
And that experience and that pain is pain of loss of time where you've wasted time and you also wasted your resources. Because let's assume it's a prop firm, you've bought too many, you've blown a lot of them. If it's a live account, you've been depositing $50, $100 and you keep blowing. So mine discipline has come organically from the process of doing those mistakes over and over. And let's say it's one of the best disciplines. I mean, which is quite contradictory because as much as I say mentorship is a nice thing, I also think, sometimes mentorship can almost make you think, things are too easy. But when you go through the hard route yourself, when you get to a point where you know what you're doing, you really know it, and you can't find yourself being swayed easily. Try this strategy today, try this tomorrow, because you already did it. Yeah.
Do you think you can really pass along? I think from teaching and trading personally, I'm concluding that some things can't be easily passed along.
Yes.
Like, I can tell you be disciplined. I can tell you, be patient. I can tell you, follow your plan. Those are just words.
Yeah.
By the end of the day, for you to come back and do those things, you really have to transform yourself. I think there's a line Ed Sequoia tells Jack Swagger, which is a line that now I really relate to. He says, the question is, what advice do you have for a losing trader? And Ed answers and says, they should take their money and give their money to someone who's more professional and a winning trader.
Yeah.
But then Swagger insists, no. Tell me something for someone who's seriously interested in transforming themselves.
Yes.
And he answers him by telling him, winners are the only ones who can transform themselves. Losers can't transform themselves.
Yes.
The person who's likely to transform themselves is already a winner, even if they're losing.
True.
Okay, fact. Yeah.
You get the gist of it.
Yes.
Like, if you know you can transform yourself, you're already a winner. You're not a loser.
Okay.
Even if you're losing
it's
at
not
the moment,
reflecting in the market,
you're a winner because you'll change your habits by the end of the day.
Okay.
But the person who, despite this pain, does not change, you're wasting time. It won't work.
True.
And that's one thing that I don't know if that's something you share. I feel like there are very few people.
You really can't transfer some things.
Exactly. You really can't tell someone like.
And that's the point I was coming to. You have clinical effects and you've dealt with the number of students. We have Financial Hub, we've dealt with the number of students. From the database we have, students, we keep talking about database for trading, collect data.
Yes.
But we've collected data. When we started trading, there's the statistics that 90% of traders fail.
Yeah.
There's 90% who won't reach 90 days, they'll blow 90% of the account. That's statistics.
Yep.
And do you and Ken, now let me ask you the question, Ken will answer for Financial Hub, see that with the local market here, with the people you've educated?
The exact question is?
The 90%, do you find it true? Is it true? As much as this mentorship,
Yes.
That's what I'm saying. Does it increase that percentage? Does it maintain it?
Oh, yeah.
You get my point?
Yeah.
I think for me, what I've come to notice, it's not a problem of mentorship. Like you see, the way you could argue you can learn Forex from YouTube, it might take you long. Someone like me didn't have that direct mentorship. It just took me long. I followed the long route, but eventually I became a successful trader. Someone else can come into the community and within 5 months or 1 year, of course, not from scratch. Maybe already they had trading knowledge, so not a beginner. Within 6 months, 1 year, you see they've already, they're passing their challenges, they're doing payouts. So how I look at it, it's not a problem of mentorship or no mentorship. I think it's a problem of personal drive. Like, what drove you to want to become a trader? If you can't, if your drive is only, something materialistic you want to achieve ASAP, that is what will determine whether if you're in mentorship or in no mentorship, you will learn.
So for you, self-drive is more superior to mentorship or education?
Mentorship is useless. Learning from YouTube is useless. Self-drive is what makes... You see, if you want to get to that level, you will do whatever you have to do. You'll do whatever it takes. That's why even the idea of mentorship, no mentorship, to me, it's not really that much of a debate because I look at it from a perspective of self-drive. Like, I had a lot of self-drive for me to go through those, bad, sleepless nights. There are nights when I even had anxiety, man. because you're sleeping and your trade is running, it's in a loss. Then the brokers have this midnight spread. So you see the midnight spread is big and it's almost wiping you out. Such things. So I remember having a lot of anxiety in my year 2, year 3 in trading. At night, sometimes you sleep
all alone.
Sometimes you sleep, you just wake up in the middle of the night, and these are real stories.
You can't sleep.
Yeah, you just wake up in the middle of the night, and the thing that is, waking you up is the fact that you have a trade that is running, and you don't even have a lot of capital, but it was still stressing me back then. So how was I able?
Back then it was a lot.
Yeah, back then it was a lot actually.
Yeah.
So how I was able to maneuver through those seasons, if I look at it, it comes from just the drive that I had, and I kind of think you need a little bit of, I don't know if drive and passion is the same thing, because I think if you have passion, it can, bring about that drive. Because from my own perspective, if you're just coming to trading because your first reason is you want to make money, that's okay. I made a reel about this, that everyone comes to trading because they want to make money. But at some point, it always hits you that it's more than just money. And successful traders are those guys who, yes, they all came in because they saw that Ferrari, that Lamborghini, and they wanted it ASAP. But then a point comes when you notice, no, that's not the right approach. I still have to take time. I still have to do a lot of work in terms of journaling, collecting data, going through that process. So for me, I think it all boils down to self-drive. If you really want it, you'll do whatever you have to do. And let me say this, I get a lot of DMs where people always ask me something like, Rick, I'm a very, very good trader, but I lack capital. And you see right now we have problems, right? And they will tell you, I can't even afford a 5K account. And I'm not trying to discriminate anyone or to talk out of ignorance. But do you really think if you have self-drive and you're a good trader, do you really, really think you can lack to get a 5K account starts from $29, $39 in some companies?
Exactly.
And you don't need to get it today. That's the whole idea of self-drive. Even if it's going to take me 2 months or
to get
3 months to raise that.
Plan ahead.
So I'm just showing this example to tell you that even apart from the learning, even the capital, all those things, it's self-drive. If you really want it, you will find a way to make it. That's how I look at it.
Okay.
Yes.
For me, I feel like I agree with him on some things, but I also have different opinion on some things. I feel like trading is a filter. It calls many, but few are chosen. Like many will be called, few are chosen. By the end of the day, the people who can do trading for a living are a minute percentage of people. And those people are not only driven, like he's saying, they're passionate, and at they're desperate.
Yes.
So a combination of 3 things. This person has no fallback plan. If you have a fallback plan, it's very hard for trading to be the thing that you do. This is a stressful job.
Yes.
And for me also, I'm realizing it doesn't get easier.
Yeah, for sure.
Losing money, making money will never get easier.
Never.
You'll get used to it, but it doesn't get easier to the point where, I just lost $2,000. It's okay. No, it still will bug you that, wow, I've just lost $2,000. I made some decisions which have made me lose this money. Yes, you're detached from it. You won't revenge trade. You won't do, but it's not easy in your mind. It's not as easy as someone who's doing another job. There are easier jobs. That's my point. Than trading. So I feel like due to those factors, you need what you're saying, self-drive. You need to be passionate about it. You need to be desperate. I listen to very many traders' stories. And the people who make it are the people who, this was the only way out. Like when I came into this, I just knew I had to figure out a way to make. And you can only have that if you're too passionate about it, or if you don't have a fallback plan. I remember there was one time we were listening to an episode with Lavi on Chat with Traders. And there was this guy who said, it got to a point, he had to tie his hand to a chair when he was trading so that he couldn't press some button. That's not someone who's not desperate to make this work.
And most traders are like that.
Yeah, exactly.
Don't
So
press.
for you to get to that point where you want to transform yourself, you're impatient, you want to be patient. You're indisciplined, you want to be disciplined. You don't follow a plan, you want to follow a plan. You must have gotten to a level of pain that I can't take it anymore. Now I have to transform. And that's why you live in here, like people like Paul Tudor Jones says, they don't hire traders who've never blown. Why? Because this person has not gone through as much pain to warrant them to transform their behaviors. So And the people who are willing not to go through that pain are very few.
Yeah.
Very, very few.
Yeah.
So
I think also understanding the process and accepting it is a very important factor.
exactly.
Now,
Because yes,
the question is, can you understand the process before you start the process?
That's hard.
can you understand before you start? You can understand theoretically
But not
from someone who's
practically.
telling you. Like I can just tell you it will take time, be patient. So that is purely theory.
It will be hard,
I'm just feeding it.
but the
in-
true process, because trading is one of the
the
toughest
true process
things to
you only get it when you are actively
Exactly.
involved. Yes.
Exactly.
So I think apart from even the drive and the drive, the passion, all those things, if you have the drive, like the way Kenna said, you need to have some level of desperation. But that desperation can be good or bad. But that desperation can make you to do whatever you need to do until it works, or that desperation can make you to make desperate decisions in the market, and you know how desperation
Exactly.
in the markets work. So I think
So I mean the other one.
so yeah.
I mean the other one. Desperate to make it work.
Nice.
Not desperate now when you're pressing
Yes.
the buy and sell button.
Okay.
No.
Yes.
Desperate when you sit down, you're just like, I can't do any other career.
Yes.
This is the only career I can partake in.
But I'm not sure if I agree with that completely, because
Yeah.
like the way personally I tell people, you can be doing your job, but it can still assist you to get into trading.
That's
right?
true.
So you can still be working, but then you've already accepted the process. You know it's going to take time. So you're working, but on the side you're still building.
Perfect.
Because I think when you put the point like that, someone who doesn't understand it well might think they just need to sit in the house and say, nah, it's only trading or nothing
No,
else.
no.
Yeah, so I
no,
think
no.
it's important to clarify so that they don't think it means that you can just sit in the house and you say, if it's not trading, I can't do another thing.
No.
So you can do all those other things. In fact, I highly recommend
You do other
you
things
do
as
other
you
things
learn how
as
to
you
trade.
learn
That's
trading.
true, yeah.
And those are the things that, because when you say accept the process, what is the process? Number one, accept it will take time. Accept it's just a career. I call trading a high-paying job, which you don't work for many hours. I don't look at trading as a pathway to financial freedom. I think it will just assist you to make a lot of money. But if you are not wise, you can spend the whole money uselessly, and
You become poor again.
so I only think trading assists you to make a lot of money, more than the average person. But then it's you to be smart enough to use the money to maybe invest in other
Things.
But you can't live, let's say you made $20,000 last month. That can be a lifestyle. Because it's not the same as someone who's employed in government and they have a contract or maybe for the next 10, 20 years.
They'll be
and
making $20,000,
then-
$30,000.
perfect. For you make 20,000 the next 2 months, the other month is a break. Even the other month you're in drawdown. So what do? The month that you made the big amount, maybe you invest somewhere, etc. So if you understand all these things and you accept the process, it will make your work so easy.
Yeah.
People are failing because they don't want to accept the process. So you want to come in and you want to make money every day. You want to, some people think when you say you're a day trader, it means
Every day you trade.
you're trading on a
Because
daily
now-
basis. Yeah.
If you're talking of the process and people to understand the process, it will go deeper than what you keep saying of it will take time, you need to do this. There's now the work involved in the process.
Yes.
You get my point? There's a point of saying, okay, look, Rick, this thing is going to take you 4 years.
Yes.
When Ken started and Taras, I remember they told me, their friend advised them not to do this thing.
Yeah.
Remember?
There's a friend of ours who told us, you guys
Sir,
go back to engineering school. Yeah, he told us. It was very clear.
Yeah.
It's very important for you guys to go back to engineering school. Because what you're getting yourself into is not what you think.
Yeah.
I told him you want to be rich.
So there's this perspective that someone can think you being pessimistic and negative.
Exactly, where you
Like-
think the abilities are low.
Yeah, like I'm downgrading your ability to become successful trader.
Yep.
But like what you were saying, if you have that growth mindset of knowing like, okay, this guy is telling me this not from a bad way, but okay, nimekwambia that. But if you decide to continue,
Understand.
just know, because Kina Ken have never forgotten. Later on, they come and say, I remember
Yes.
this guy said this thing. This
Now
thing
we're
is
too
hard.
deep.
It now makes
But
sense.
now you're deep.
Yes.
Now it's what Napoleon says. Reach the other side and do what? Burn the ships.
Yeah.
There's no going back. We're not crossing back that river. If it's either we die, don't get me wrong.
Of
It's
course.
not like now you don't have an option. But
That's the
it's-
best analogy.
it-
Burn the ships.
Yeah, man, those ships, man. Do something else. Like
Yes.
when you're studying Forex, you can't just quit and do Forex full. Also, we never advise someone to do that. But as you're doing it, know that this is the option. I'm not going to go back.
True.
If I'm building this, naanza reducing it nikisongesha imbele.
Yes.
I'm putting in the work, the effort, the time, the money, the networking. Okay. So at the end of the day, I think I just wanted to add on that, as both of you have answered. As much as you say it takes time, there's no correlation between time and success in trading.
It depends what you're doing with that time.
Exactly. That was my exact point.
That's why you meet someone who tells you, I've been in trading for 5-6 years, but I'm not
Many.
making money.
I remember
there's
there's
no
a time
relation between
we went
that.
for
Recently,
one of
this
the...
guy met a guy who's traded for 16 years. And he hasn't made
And
any
how much
money.
he's losing?
He's still losing.
Oh my God.
He's losing.
Yes.
He said...
That's bad.
That's bad.
Kenyan?
No.
Oh, okay.
He had come to visit from a different country.
Hey.
16 years. Yeah. He said this thing. He's asking me, what do you do?
Yeah.
So...
I even feel like trading shouldn't be preached to people. Like, it's not, it's wrong.
Or the way
yes.
it's being preached.
Even preaching it. Like, I feel like it should be like a cult thing where a few people are just selected to come and do this thing. But preaching it to the audience and telling people,
how will people find out about it?
That's the bad thing. Okay, there's the
Because
disadvantage.
you also need liquidity. Don't forget that. So,
we need those people to come
yes.
in, to try to. But if you think about it, it's. Gitosh used to say this. He used to say, "Ikitu ufai ufunze mtu."
Yeah, Gitosh used to tell us...
He used to tell us, Ken, don't stop teaching people this thing.
We used to wonder why.
me how I look at it, ni ufai kufunza kila mtu.
But
That's the
teach
thing.
everyone.
That's
Of course
the
you
thing.
can't teach everyone.
No,
That's the thing.
Let me
What do you
clarify.
Yeah.
Even if 100 people come to you and they're like, we are interested in this thing, I don't think you should take all of them.
Exactly.
You should have a way to filter.
You should
Yes,
cherry
yes,
pick.
You know, because if you just take all of them, they're just coming with the idea that this is Forex, they're seeing you're doing well, it can make money. You're going to struggle with them. So I think even if 100 people come to you, you should only select.
And part of the
few.
filtering is telling the truth. I was
Exactly.
sharing with Georgina earlier on today. So guys, Georgina is also another trader, mtamona soon. So I was telling her, let's be honest. Okay? Honesty inakuanga poa.
Yeah.
As thought leaders, maybe in this field, clinical, financial hub, and we've been saying this a lot with Ken,
Yeah.
we sell hope.
Yes.
We
Not
sell
reality.
hope to traders. We don't sell, we don't sell like success.
Yes.
We sell hope. We sell that it is possible.
Yeah.
But at the same time, like now you're saying, then we add on top that filter.
Yes.
Look, now we tell you the truth.
It's possible,
Possible,
but not for all
yes,
of you.
Yes.
Yes, and also that we also, let's be realistic. Ile data, I'm not sure we've taught many students. A lot of success is very much aimed on what that person will do.
Exactly.
But on top of it, that data, 90% of traders do not succeed. I have seen it with my eyes. So, and the good thing as thought leaders on this side, we get to see a lot of what the students are doing and how can do it opposite.
Yes.
I remember there's a student that came to, not a student, a client, back when we had a 3-man office to see us. He was Nigerian to see me and Ken.
I
And
remember that story.
this guy, now, you can see a newbie trader and how they think.
Yes.
So that day, that guy came to the office, he's talking to us, he's desperate. He's telling Ken, okay, I'm trading gold. I'm just taking this trade. So Ken listened to this guy and said, if this guy is trading like this, let me do the opposite.
Yes.
And I made money.
A lot of money.
Yeah.
The opposite. At that time, hakuwa na props.
Yeah.
It was live accounts.
Yeah.
Ken, that time, used to be called, if you watch our YouTube videos, boy plunger.
Yeah.
Those are the time Ken was shorting
killing
gold.
it, yeah.
It's like right now, the way gold is in a bull market.
Yes.
Then you meet someone who's telling me I'm buying it. I'm just buying it.
Yes.
I'm just going to be
Yes,
buying it
yes.
based on what criteria. It's going up. I'm buying it. I'm buying it.
It's just following the trend.
I'm buying Bitcoin. I'm just buying
Just
Bitcoin.
buy.
Just buying.
No criteria.
But you when you watch the chart, you can see clearly this thing is almost topping.
Yes.
You're just buying.
True.
So if you see who's the last buyer,
Yeah.
the one who loses money,
True. True.
and you can sense the last
Yes.
buyer.
Yes.
So that's a very good example.
But to continue the podcast, data. We've talked about student data and success data. The last time you came about 2-3 weeks ago, and we had a good chat, me and Ken, and you talked a lot about data collection.
Yes.
What have you been learning from your data collection so far? And what you told me, you're learning new stuff. And there's something I took away from that.
Yep.
You said any market you backtest, like for me, my approach used to be, or it still is, when I backtest, I take my strategy and I test it on different markets. You don't do that.
Yes.
you take a pair and learn that pair.
Yes.
So tell us.
So you
tell us
develop
more.
a method around the pair?
I develop methods around, even that's what I'm doing right now. I'm studying different markets. And it's very interesting. You see, I always say price action is general, but strategies are specific. Price action is overall information. Candlesticks, you see the wick, it means the same thing. Whether it's Bitcoin, whether it's gold, that wick represents the same thing. The support resistance level, the way you will mark it on this market is the same. What else? The patterns, there's the same thing. The market
levels.
structure, if you see a break of structure, it means the same thing. That is overall price action.
Okay.
But when it comes to strategy, you narrow down, you take that knowledge, you study different markets and see what is working more. If really you could just learn strategies and apply in every market, I'd be profitable in gold. Where am I trading one market?
Everywhere.
And that's something that
Yes, because
continue.
my strategy works very well. I have very nice months, consistent months.
Yes.
So why am I not trading gold? Because if I go to gold, you might think, I'm a newbie. I don't know anything. And I can study the price, but I've not yet figured out a way to find that systematic model that can be repeated over and over and make money. I can make money, don't get me wrong. I can open any market even this week, do analysis, and because of just price action overall, I see a level, I try to look for a pattern, and it works. But then can I test it repetitively for the last 1, 2, 3 years and find enough data? So for me, I don't believe in the ideology of you just learn strategies and you try to apply them everywhere. I believe every pair, there are pairs which move similarly. Like I trade the yen pairs, most of them move similarly. But guess what? Even in the yen pairs, some of the committee members might tell you this. For different yen pairs, I have different variables that I look at. So I might be looking at the same strategy, but maybe I always wait for the retracement to get here. For different pairs, as I backtest, I notice they don't retrace with the same volume as other pairs. So for
Magnitude.
that specific pair, I'll treat it differently. So that's how I look at it. You should study each market independently. And again, these things, as we say, everything you're doing is not theoretical. It's based on data.
Yes.
Study the data of the best traders that you know. Even just in the pro firms, let's not go so far, in the hedge fund, TTC.
Yeah.
Just look at the pro firms traders who have consistent payouts, the ones you can find online. You don't find them trading 10 markets. They've just mastered 2 or 3 markets because they have studied it over and over and they've developed a model that suits that specific
So now
market.
I'd reframe my question too.
Yep.
Because I'm actually thinking of what he's saying based on my data. Because like for me, if I look at my data indicates that I do significantly well on some pairs. Like if you look at the divergence between my performance on some pairs and others, it's quite huge.
Yes.
Like you'll find out the specific pairs where I have a hit rate of around 60% on my live trading, not even on my backtested data.
Yes.
On my live trading. If I look at the trades that I pick on that pair, I rarely lose.
Yes.
Okay. But if I look at other pairs, I rarely win. You get?
Yes.
So I even thought, okay, it's
On the
like you're
same
making
strategy.
money on the same
On
strategy.
the same strategy.
And that made me, so the decision obviously I made was to cut some pairs. But then that left me wondering, so based on what we are saying, does that mean then your edge is not on a strategy, but your edge is on understanding of a pair? So the Traders Show just got bigger and better. We're thrilled to announce that Pepperstone is now the official sponsor of the Traders Show. This means we shall have more content for you guys, we shall have bigger guests coming into the show, and we shall be able to reach a wider audience. Pepperstone is a world-leading Forex broker that offers you a chance to trade different markets, including CFDs, currencies, commodities, and indices. To start off, you can open an account with them using the links in the description below.
My edge is on, first of all, the edge is not even about, the edge starts from understanding of price action. If you can read price, you can study any market. That's why I am not, afraid of what if the trend changes, what if this changes. I even, I've been more on a bullish trend for a while, but I take time to collect data even on a bearish trend. In those specific times that they are trending, and how I look at backtesting is you need to be as open-minded as possible. Like you get to collect data with a blank mind. You don't go there with, I want to see this, I want to see this. You go there with, this is what I'm seeing. So if I see this pattern happens more, I'll focus to look for those patterns more in that market. Something like that. So how I'd say from what, you've described, like you notice some pairs are not working that well and you cut them off. Before you cut them off, I'd recommend you test that pair individually and find whether it uses different variables. Because you might cut
So
it
on
off
its own.
and it's not necessarily, the pair is not the problem. Maybe
It's the implication of my
Exactly.
strategy on the pair.
So personally, I'd take the approach of focusing on that one pair, looking at every variable or every criteria that I follow before I execute that I've been using. Then I start to focus on the losses a lot. Because when you're building a strategy, I say focus on the losses more. Many people start to collect data. When they find losses, they run away. But you don't know those losses can be turned around. That's how I built my systems. When I started to backtest,
and that's what I'm
Yes.
sure you get, because you come neutral on a certain pair. So you're going to look at wide
Exactly.
negative things. So you
Yes.
try now filter and
Yes.
see what now actually works.
yes, and the losses are more important when you're backtesting than winners. If you're not keen, because it's those, you see, losses, you can do two things with losses. Number one, they can help you to know this pair doesn't work, let me eliminate the pair. Number two, the losses can help you to notice what makes you lose a lot. Then you can now start focusing on,
How you
can I
can
eliminate
win
that
based
thing
on
that
that.
loses a lot. Sometimes it could be you're losing a lot because you use a very tiny stop. So you increase the stop and you start winning. Sometimes you're losing a lot because you don't use, your break even is not at the most optimal level. So you get stopped out at break even maybe, and then it goes to your side. So you need to figure out first, is there a way I can turn the losers to more break evens and more winners? Or just reduce them. You can't eliminate all losses. So for me, I either figure out a way to reduce. That's why I trade like 3 or 4 times in a month. If I just choose to trade like casually, I can be trading like on a week like 4 or 5 times.
Yeah.
But then it didn't take me long when I was collecting my data to notice that way your performance becomes average. Your performance becomes average. You're making money in the next 2 months, you're losing. And I also use the same criteria when selecting pairs. A pair like GJ is very profitable based on my system.
Yeah.
But I don't trade GJ for a very simple reason. Its highs are very high and its lows are very low. So I can have 2-3 months where I'm making back-to-back winners on GG and I'll be killing it. But then I can have 3 months where GG is giving me like 7 trade losings. So is it profitable at the end of the year? Yes, it is. But then does the data and my personality really match up to it? No. So I don't trade it because of that. So I think traders, like data collection is so key such that if you really focus on it, every answer you're looking for in the market, your entry, what should I look for? Where should I put my stop loss? Which pair should I trade? It will give you every answer. But it takes a lot of time. It's a headache. I won't lie. Before you...
Because that's what I was
Yes.
going to ask you, if you're to give someone a gem just on that. If you're looking at the market and reading it like a child, let me learn from this. How do you then now, what do you look at? What's the steps you take to filter down, okay, now I found what works on Euro JPY, I found what works on Aussie dollar. What's your process
First
to
of all,
filter it down?
First of all, strategies are difficult to build if you can't identify a bias of a market. So if you're struggling to build a strategy, it's because you're struggling to identify the bias. That's the first thing. By bias, you mean the direction. It could be overall or the immediate. Maybe from my own perspective, if I can tell this market will buy or sell for the next 2 years, there is no way I can develop a model around it. Or if I
How
can
can
look...
you tell that it will buy or sell?
No, that's the thing. Now we're getting there. Before we get to... because now I'm talking about back testing. So we're talking of markets that we've already seen playing.
Okay.
So for me, when I'm trying to collect data, I always try to look at the bullish runs that the market had. So like you can find a pair that had a bullish run for 7 months. I select the specific bullish runs. I also select the specific bearish, trends. Then I try to look on a daily basis. I look at the calendar. Was it an FP day? So it's a lot of work. Then I try to monitor, am I seeing repetitive patterns before the break? Let's assume the market has been trending downwards for 3 years and you want to backtest and find a model. The first thing is you should have an idea of where it's going. So already you know that market has been going downwards. The second thing I do is I'll start to go on those specific days that the market had that
strong impulses.
selling pressure.
Yes.
Then when I go to that day, I'll narrow down to the lower time frame and wait for the time that we had a break. That strong momentum. Because that strong momentum is what pushes your trade to TP. So I'll ask myself before the break, what did we see?
Okay.
Did we see a pattern, and what pattern was it? Was it a double top? Was it a flag or whatever? Was it a consolidation? Then price broke out of it. Then I'll record. We had a setup on this day. But before the price moved downward, there was a consolidation first and a retracement first. So I have like a whole worksheet which has different columns. Okay. So I'll record this one sold, but there was no retracement. This one sold, but there was no retracement. This one sold, but there was a retracement. And I also try to look how did the retracement happen, something like that. And for each trade, I also record the risk to reward. Like if I had taken the trade here and put the stop loss above the structure point and the TP, put the stop loss above the structure point, the next thing I'll ask myself is, how far did the trade go? Maybe it went 80 pips. So I don't even come with an idea of risk to reward. I just go the risk to reward that the trade did and I record. This one did a 1 to 4, 1 to 7. So at the end of backtesting 2-3 years, you have a whole data. And now you can look of all the winners, what was the most optimal risk to reward that was being hit consistently. So that's how personally I've been developing models which are very mechanical. So when you come to the real market, if you see how I trade, my models look as if, it's as if you already knew what the market was going to do. Not to mean that you're winning every day, but if you look at my winners sometimes, the level that I'm even taking the trade, it looks as if you shouldn't be taking that trade. But I tested over and over and I saw as long as I just see A, B, C, D, your work is just to click the buy button and put your stop loss here, your TP there. So if you're looking at a market, the first thing you need to be clear about is the directional bias. If you can't identify, if you don't have an idea of the direction, everything you study is useless because you study in respect to the direction. So if I know this market, I'm looking for more buy opportunities, I try to study to see how do the buy opportunities happen more. That is how I've built my model. It may not work for everyone, but that is specifically how I've found, yes, my, consistency in the market.
Recently, your recent YouTube video, you posted a $1,900 profit.
Yes.
Cut JPY.
Yes.
What was the thought process behind that trade? How long did it get you to take it? Just let's give an example of that one trade and how you executed it from before, during, and after.
Yes. So again, I say when you build a model and a system, sometimes you don't even have a thought process. As much as people think I'm there looking at the markets, I'm busy. Nah. I'm just always there chilling and I put maybe an alert. I'm waiting for something to happen. I'm busy doing other things. Because when you talk of thought process, sometimes, someone can think before the week started, they looked at so many things. I think if you build a model that is as effective as mine, like my model is mechanical. Mechanical means, it's like the engine of a vehicle. As long as you turn it on, it just rotates and the vehicle will move. Your work is just to kanyaga mafuta gari iende, kanyaga breki, simama. Unaweza potea kidogo lakini uendelea tu kuendesha gari. Una get? Kitu kama hiyo. So for me, my thought process, I've done so many trade breakdowns on YouTube. And sometimes it gets boring because I repeat the same thing every other time. Even if I do a trade breakdown, I'll repeat to you the same process. There's nothing new. Yeah. I won't tell you this time I saw this. No. It's just the same thing. And basically, my thought process is just following my model. Trend, which is the bias for me, it's been bullish for a while, so I stick to that direction. I found a lot of success sticking to one direction than trying to maneuver both.
By one direction, you mean like all the time, Mama? When this trend is up, you're up. If it's down, you're down. What do you mean one?
Exactly. If the trend is up, I want to focus on up.
Okay.
If I notice there is enough reason for me to believe this market is going, the price action is showing this market will sell for the next maybe 6-7 months, I'd rather be looking for shorts alone in that market. Okay. So I find it difficult to sell today and buy tomorrow. Yes. I really find it difficult. It confuses me. You find I made money here, I lost it there. Yeah. Yes. So for me, trend number one, direction, which has been bullish.
How do you identify the direction?
I look at the long-term picture. I look at the long-term picture most of the time. So if the long-term picture has been bullish 2 to 3 years, that's the kind of long-term I look at. Because again, I'm a day trader, so I just want to focus on what the market has been doing.
You told me you just take day trades. You don't swing.
I don't swing. That's because of personality, though. Yes. If I had a way to build a system of swinging, probably I could, but I'm not so sure if it's an approach that I fancy. I think it's my personality which prefers day. Okay. Even the setup that I always backtest, they're usually very short-term.
Short-term.
Yes.
Short-term, like.
And that's what I've told you. I always, when I backtest, I look for the point where price broke. I'm looking for that point where the momentum was. So when there's momentum, if I'm looking for 40, 50 pips, maybe 4 or 5 hour candles will have hit that. You get? So I don't always, like, my typical trade doesn't play around my entry. Like I'm there, I executed in the morning, I just still at the entry.
So you do momentum
there's something
plays.
bad. I do momentum plays, but it's not like I know momentum will be there. But when I was collecting the data, I was focusing on the point where by the time I execute, the break is just about to come. The momentum is just about to come. So most of my setups average 4 to 5 hours. Yep.
And you're in out.
In out. So day trading for me works well.
Yeah.
Swing is nice, but it's just more of personality.
Yeah,
I don't want to be
yeah.
sleeping, for 3 days and the trade is still at
You
break
tried
even.
that,
Yes.
done that. You don't want
Yes,
again.
yes.
The funniest thing is from his description, I also feel like if I tried to trade like you, I would make a lot of impulsive decisions. Like I would come out of a trade and I'm looking for a specific thing for me to come into a trade. If it's not there,
Why would you come out of a trade and look for another?
I just feel like I would have that impulsivity triggered in me.
But that's why you have a playbook. You see, like that, all those things you're saying are factored in my playbook. I factored in the maximum losses I can take in a day. I factored in all those things. I know the days not to trade. So like for me, I can't
never trade NFP and use
all those things. I don't trade, and I can't take 2 losses in a day.
You're done.
If I take 2 losses in a day, max.
Now you see, for me, unless now I keep on adding those things day in day out.
Yeah.
Where you have like, if I take these losses in a day, I'm done.
Yes.
If I do this, I'm done. If I do this, I'm done. If I do this, I'm done. Because
So
I
you
feel
prefer
like
swing.
yeah, I prefer swinging, and I also prefer.
How do you sleep with your trades running for
it's
3
fine.
days?
How much
I
what's
sleep
your take on risk management?
Right now, I have a trade that I've been holding for 2 weeks.
Yeah,
Went,
Where is he?
I
came
can't.
back, and you can see I'm just
You
easy.
go over
Yes.
the weekend,
Yeah.
just start again.
Over the weekend, you find it there.
Yeah.
NFP comes out, weeks
It retraces a bit.
You
I-
continue.
And all of these
Examine.
you're looking for one is to watch risk to reward.
Okay, depends. Ideally, I hold positions between 2 to 3 days, and I'm looking for 1:2. But now for like the position that I have, that's about 1:5.
Nice.
So it's
You
a
would do
position
that when
that's
you do your trade.
doing very, very
Mostly I've been doing 1:3, but I also shared in the recent video. That's the thing. I'm trying to figure out a way to capitalize on specific setups because I've studied my data the whole of last year, and there are very specific types of setups which, after you take them, the market pushes 100, 200 pips, and all you did was my TP is 45. All you did was a 1:3, and you could have done even a 1:5. So the only thing I'm trying to figure out is how to. I learned this thing from Umar Ashraf. I think you guys know of him, of course, where he says he doesn't treat all the setups the same. For him, he was speaking in terms of sizing, that he has specific setups which he can size more based on intuition and experience, and just the data shows those setups have more higher chance of working. So for me, mine, I can't say I want to approach it from the perspective of sizing, but it's from the perspective of maximizing the TP. That there are specific setups which I think it's injustice for you to do a 1:3, and then the market does, like the most recent one, the market did a 1:15 plus. And you did within 2 days, like I entered today, and by tomorrow, it was almost a 1:15. And you did your in fact, if you look at your trade, it looks like a very tiny thing because the market went for a long time.
Yeah.
So I'm trying to figure out a way to maximize more, either by trailing my stop or just trying to collect data.
Partials.
And partials too. I've not found a very successful formula in partials. I don't know if you guys do
Here's
partials.
Yeah, I do. I'm a heavy partial trader.
Heavy partial
I
trader.
used to be a heavy non-partial trader. Trading, Peter Elbrand says, strong opinions weakly held. So always change when you get new information. Trading is all about that. Seasons change. Data card GPY
Data
yako,
changes.
Yes.
itafika time ita change. That's why you still need to backtest.
Yes.
Card JPY, backtest anything. So partials, I have one and it works good.
Can you tell us about partials? Because the thing I struggle with partials is,
So
even on backtesting, your setup is a 1:4. But by the time you start doing TP1, TP2, you close at a 1:2 or a 1:2.
Yes, that mathematics.
Mine,
Yes,
you have to do the
mathematics.
math.
The math
So
is
for
what is
example,
disturbing me. Yes.
Every trade that I have a starting risk reward of 1:4 has a guaranteed 1:3 is the maximum that I'll make on that trade.
Nice.
So 1:4 is the actual risk reward on the trade, but the actual outcome percentage wise that I'll make maximum is 3%.
Okay.
So now this one here is not for that one of yours.
Yes.
We're looking at my trades with Ken, like more or less what you're saying. So we looked at my systems, I had very good entries. Swing points, turning points,
Yes.
very good entries. We went further and did those analysis with Ken and other tools, and they helped us look at it. But we could see, okay, your entry is very good. You get very good entries. My backtest data shows very good entry points.
Yes.
But the market tends not always to reach my target.
Okay.
So it starts well. So me, I'm opposite yours for now.
Yes.
I'm not looking for a way to maximize ikipita target. I'm looking for a way to maximize ineko kwa hii trade. Okay.
Yeah.
So what I do, when market gets half to my position, so I have a risk reward of 1:2. So let's say I have $100,000 account, I'm risking 1,000 to make 4,000. So if market is at 2,000, I have running profit of $2,000. So the first thing I'll do is what? I'll break even.
Yes.
At 0, I'll break even my stop loss.
Yes.
Okay. The 2,000, I mandatory have to take half of that profit.
Okay.
Mandatory. It's not a debate at
You have to.
hii na ikifika TP tutakuwa 4,000.
Yes.
Take half profit. And we did backtest data with Ken, and we used to see half targets have a higher strike rate than the full TP. So
But have you compared the monetary gain of the two?
Listen. I'm getting there. Yes, I have.
Nice.
Okay, I'm getting there. So at half level, I take half profit.
Yes.
Nimacha. So if I take 2,000, Nimacha how much? Now let's do the math. Let me see if you can.
Your target is?
My target is 1:4.
And you're
It's at
risking-
2,000
So
now.
you're
it's
risking
2%.
1,000.
Yes,
So
I risked
you've left
1,000. So we're at 2,000.
So you've left.
I've taken half profit.
Yes.
I've taken partials.
Okay.
And we found with Ken that many people don't know how to take half partial profits on MetaTrader.
I included.
Hey guys, we're taking Forex education to the next level. Join us every week for live exclusive webinars where we break down market insights and trends, fundamental analysis, market sentiment, pro strategies that we use here at Financial Hub, and live Q&A sessions with us. Whether you're a seasoned trader or a beginner, this is an opportunity for you to learn, grow, and trade smarter, all free thanks to Pepperstone. Next session drops soon. Stay tuned and don't miss out. Yeah, do you know how to take partial profits?
I've seen those things online, but I've not done them.
You've seen it.
It's
Also, I know
simple.
it's there.
On a lot size, you can take
I know
partial.
it's there, yes. I know it, but I've just not applied it. But I know
Okay,
it, yes.
when you have a one lot trade running, as we used to think, take
Yes.
2, 0.5, 0.5.
No, yeah.
It doesn't work like that. Utakuwa na too much cost.
Yes.
Take one lot. If you want to close half a trade, click it. Okay? Kuna kwanga hapo imeandikwa close trade. Unachokia party imesema click then close trade.
Yes.
Press that close. Sitafungua hii, it will open a new section.
Yes.
You're seeing your trades fluctuating, then there's that yellow line saying close.
Yeah.
Go to the lot size. Lot size iko tu hapo juu. Change it to 0.5. Then close 0.5.
So it's like you've closed half of the trade.
Yes.
Yeah.
So you can
Half
close
of the
one
current
lot.
profits that are running.
Any lot size you can
Okay.
close. You don't have to close all of it.
Yes.
So at that point, so I closed 2,000. Now, if I close 2,000, I've closed 1,000. So I've closed like 0.5 lot. Nimacha 0.5 lot in a run. Now, I already have $1,000 in
Yes.
the pocket. Outcome of this trade, we don't know if it will be a win or a loser or a break even because I've already broken even. So if market goes back down towards my stop loss, I'll come out at break even.
Okay.
So on a trade that was to lose, I still made my 1,000.
Okay.
If market goes to my target, remember I'd left $1,000. So the $1,000 ikifikia target itakuwa how much?
2-4.
It was so I have $1,000.
Yes.
The original 2,000, if it reached TP,
You
it would
already
be
closed-
4,000.
you already
But you already
half.
closed half.
Yes.
Now that half ikifikia TP, itakuwa how much?
Rick. Yes, Abu ni yako.
Yes, Abu, naelewa. Lakini no,
How much will that
I
be?
understand it, but I don't think it will be 4,000. No?
It will not.
It won't, because
I've
you've taken
closed
half.
the half. Yeah.
So it will be half.
So
2,000.
this 1,000.
So in short,
what can you say?
in short, whatever you are risking, it's like now you're risking only 500, right?
Yeah.
Because
Exactly.
he closed half,
So he was
closed
risking
half.
$1,000.
but he closed half.
He took out 500.
Yes.
So he's
So
remaining.
it's like
500.
now you're only risking 500.
Exactly. So
Yes.
the 500,
500 times 4 will make you 2,000.
2,000.
Exactly. So if it reaches target, I'll
You'll have
only
made
double
them.
from 1,000 to 2,000.
Okay.
So now total, I'll have made 2,000 plus that 1,000 I took, I have 3,000.
Okay.
So,
I
Mathematics.
get it.
so that's what I'm saying. On a risk reward of 1:4, my target is to make at least a maximum of 3%. Those are thousands that I was taking. The markets that many times reach halfway and go down.
Yes.
So I'm maximizing and also monetizing on those trades.
Yeah.
My backtest data showed me 84 trades were losses on a one pair I was trading. I was doing on gold. But 47 of them were trades that could have been winners but ended up losing because I did not take any profits.
Yes.
So mathematically, on a macro level, for me and my system, it is much more profitable to do that, than holding.
Sense.
Okay?
It makes a lot of sense, kabisa.
But that's my it's part of my approach
because
that I got from backtesting data.
Yeah, also when I listen to you, it makes so much sense, but then I see the difference. It makes me think that it just depends on the system you're trading. Because so far for me, at least if I try to do that, my data shows I'll be less profitable.
Yeah.
Like I'll make less money so far. You know, assuming I don't change any variable. If I start taking partials, I'll be... The only thing I'll have done is that I'll have lowered my risk to reward. So I'll be making less profits, even if I consider those break-even trades.
You're doing fine. Yeah. You go find how you'll maximize Koju.
Yeah.
I don't care where market goes, Koju. Entry na my TP, that's where trade management. Yes. That's what I'm trying to maximize on.
Okay.
Later on, if you work fitty for some time, okay, how can we
now you start to figure out how...
You know, it's always a step-by-step what you're saying.
I agree.
Then figuring out the next.
Okay.
So, may I have the final question that I'd love to ask? This one is for everyone. What are you currently struggling with? What's your challenge? Your trading is, you have a challenge, something that you're still working on a daily basis. You've not streamlined everything. So what's that thing?
Is it in life or are you talking about trading?
Trading, no, in life.
Yeah, man, but in life we might call our own therapist. Anyway, my point is what I'm struggling with in trading so far. I think since I started trying to be dynamic, that's where I've noticed that it's one thing to master one model, it's another thing to try to build other models. So I don't know if it's a struggle, but that's the thing that I'm trying to crack and figure out, how to be as diverse as possible in the markets. I don't want to be, you know, a one-time wonder trader who makes money only in some seasons. Then when the market conditions change, you can't make money. Yeah, so trying to figure out how to be very, very dynamic and trying to also use some fundamentals in my trading, because I hardly apply fundamentals in my trading. And that's the biggest reason why I'm also a day trader. I can't swing. Because I'm only looking for that immediate 1 to 3 which happens within the next 2, 3, 4 hours.
And then you're done.
And that's why you can't take news.
That's why I can't trade news. Me, even when I see people there with, calculating news, ilitoka hivi, mi nasikianga tu.
Kill it to the
yes, but I don't focus so much to I understand the fundamentals, but I don't apply it in my markets. Because NFP ilitoka hivi, so this means the market will do this. It's okay. Me, I have a strategy that I've collected with data. So I look at all those things, but as a day trader, I look at day trading, as an advanced scalper. You see, a scalper doesn't care about NFP scamming. NFP can be coming in the, like in Kenya, it comes approximately at 3:30, 4:30 Kenyan time. Yeah. But by London, in the morning, 10, 11, he already found his 20 pips. And he found 20 pips maybe twice. So I look at day trading as just advanced scalping, where you're just in the market for a short period of time. But it's less emotional and you're taking less setups as compared to a scalper. So what I'm trying to figure out in my trading so far is being diverse, and so that you can be able to be here for, to have that longevity in the market. So that you not just focus on one thing, and if the one thing stops working, nothing else is working for you. Just diversifying, trying different approaches, and trying different markets. Yes.
For me, you're finished, yeah?
Yes.
For me, I think it's the perfect execution of the data I'm collecting. We tend to collect a lot of data, very good, honest data. Yes. But you tend to still do the opposite.
Okay.
In trading. Not really the opposite, but you don't follow it to the latter. So there's discrepancy of your backtest data in live trading, not because you're not doing the right thing, but because you backtesting, how backtest emotions.
Yes.
How backtest, I missed out on a few trades. Because of backtesting, many people collect data. I backtested, does this trade? Then you rewind it and take it. You can do that in backtesting. True. Yeah, let me rewind. I missed this one. Na hii outcome iliwork. Kwani sikuchukua trade. So so you go back kujifurahisha.
Una record
data yangu ni fiti.
So boost your ego.
Yeah, to boost your ego.
Yes.
So being honest with yourself on the backtest, because I think many people have that discrepancy because you're not honest in the backtest data. You need, if you were to sit here and we watch each other,
Hey, wewe una backtest vipi?
let me see you backtesting.
Na pia timing.
Timing
Mtu ana backtest. Like, see, I said the same thing, isn't in one of my videos.
Yeah.
Watu backtest ana record sa ilifanyika 1 am na anajua atakuwa.
Yes.
You won't be awake at 1 am.
Yes,
So unakuja tuonyesha hapa I have 80% win rate, I'm doing well. But then if you start look at the setup, hii ilikuwa saa 9 am, 2 am.
Yes.
Are you sure you'll be taking setup at 2 am consistently?
Fact.
So that's another
and these days
thing.
when I'm backtesting, also may have to put that timestamp. This trade was executed at this time.
Yes.
So I have to look at that, and I normally record or screenshot in my backtest with FXREPLay. For those who do not backtest, start backtesting. To a free, not free, but discounted link below with FXREPLay. So try it. So what I normally do, I have to put, the FXREPLay allows you to journal.
Yes.
So I have to journal and go and look at that time. So after journaling my backtest, I have to go and look at every screenshot I took. Time, meaning, we be realistic. Even when I say 12 a.m. you are asleep. You make a trades, karibu 5 will 12.
Yes.
You are dead asleep, my friend. Let's not lie to each other. So yeah, Ken, that perfect execution, being honest with myself backtest, and then trying and bringing that execution perfectly in trading.
Yes.
Now, the only thing I was telling my students the other day, now the thing about live trading and comparing it with backtest, because my student was asking me, so how will I know I'm in line with my backtest? There's no shortcut. Now, that one you have to give it time. Backtest, live trading, and backtest you can do 5 years in 1 day backtest.
Yes.
But trading 5 years, so don't compare 5 years backtest data with 1 month of trading.
Yes.
Of course, there's a discrepancy.
Yes.
Okay. So yeah, so that's what I'm working on, Ken. Good execution of data, my data, the data I have, not what I think, the data. Last year, a lot of things that I made me lose a lot of money, and I did a video on that, how I blew my accounts after losing the monies, is because my prop farm accounts, is because of that discrepancy.
You are trading what you think more.
More or less. Like I backtested my pattern on like a 4 hour, but I'll still look for it on the 1 hour.
So that means you're trading what you think instead of what you should just follow.
So if it works on the 4 hour, it's still the same pair. I'm not even changing pairs. Pairs can anajua mi kwanza nakuanga consistent. I'll never change. I'll die with that pair.
Yes.
But now you try and play around with that pair in ways that doesn't work.
Let's just say in ways that you had not tested. Because you tested the 4 hour.
This year, niko data mbaya. I was telling Georgina earlier on, I think I've only done 4 trades this year so far. February is almost coming to an end. Only 4 trades.
Yes.
And just patiently waiting for the next one. Yeah.
Okay. Ken, you've not told us your
Can
struggle.
you finish off? Tell us your
Your struggle.
I'm trying to beat me. I'm trying to be a better loser. I'm trying to be a better winner. I'm just trying to make sure I don't interfere with my trading, because me interferes with trading. So I'm trying to beat me.
Yes.
That's it.
Ken versus Ken.
Ken versus Ken. I'm not
a nice
competing with anyone. This year I'm competing against myself.
Yes.
Period.
Do you find yourself, ever feeling pressure to compete with, I don't know, other traders? Maybe online you see them doing better than you.
Not really.
Okay.
But I think I set very high standards for myself. And I now want to work on like just realizing the realistic aspects that you should set.
Okay.
Like for example, even if I have a 60% win rate, I'll still lose. And I need to be comfortable with that.
Yes.
A loss shouldn't get into my head. So those are the things that I'm saying now.
Okay.
And also a win. You can make money 3, 4, 5, 6 months.
It
Gets
gets
to your
into your
head.
head, yes.
Those are the things that me I'm trying to beat. Yeah.
Okay.
Okay. So I think we have another podcast we're doing in a short while, which is a roundtable. So I think for now, this one just does it justice. Last time we did a lot of stories. Today we've gone down into
At least talk more
actual
about
trading and
yes.
what we actually do, all of us.
Yeah.
But we have another guest also who's here, and we want to do a roundtable and discuss more of what we're saying. So let's not exhaust too much here and save the rest for that one. But for this episode, I hope you've enjoyed and you've learned. And yeah, any parting shots you have for your people?
Not really. I mean, people just put in the work, go and collect the data, do the uncomfortable things that, most of you don't like doing. Be patient, give you time, and scale up your capital. It will save you a lot of stress. Yes.
Drop the mic.
Yes.
Okay.
think hard about whether you want to do this for a living. Think hard. Don't just commit to it. Think hard. It's not glamorous. It's not a beautiful thing, really. And yes, you'll make a lot of money, like Rick said. Making money, you will, but it involves a lot of discomfort. So most people can't tolerate what is really contained in trading. And like Caleb said, there's no need for us to sell you hope. You have to come to terms with reality, and reality is harsh. It's not. Trading is a hard thing. It's a hard way to make easy money. Live with that. Yeah.
I think there should be a checklist of what it takes to become a successful trader.
Exactly.
So that someone can assess themselves and unajiondoa kwa list. For example, you just put those truths like the time, the patience, the data.
Yeah, we should create
the work ethic.
Yes.
I know those,
the work ethic.
Yeah. Like those assessments.
Yes. Apate hiyo reality ya yes, ajue kuna usiku hata lala, ajue tu hizo vitu.
Ajue before answers.
Yes, before answers.
You comfortable notes.
Yes. Na pia tumwambia akifanya vitu vizuri, he or she will make a lot of money. So
ajue kuna upside.
Yes, they should know the reward is nice,
There's the
but
upside.
then they know the process. So mwenyewe unajiangalia kama iwezi.
Definitely there are very few things that match up to the money you can make in trading. You can make $30,000-$40,000 in a week.
Yeah.
When you're trading, in a week you can make that cash.
Sometimes you get to a point where your average stop loss is someone's salary.
Exactly.
Yes.
You can get there. And even someone's annual salary.
No, it's true. It's true. Even
Someone's
annual salary. Yes,
You know,
that's your stop
you're
loss.
trading
Yeah.
that and you're losing that and you're comfortable.
Yes.
But for you to bring your mind to that state, for you to get there, it's worth it also.
Yes.
Before I lost my accounts, my average stop loss was $9,500
Imagine.
per trade. Yours was higher, Ken.
Yeah. So if you think about, I was at around $13,000.
That's someone's annual salary, especially huku Kenya. Hiyo ni mshahara mtu ya a whole year.
Yeah.
It's your stop loss.
It's your stop loss.
Every TP can buy you a Benz if you want.
So you can get there, but
yeah.
trust me.
Yeah.
Even, and that's why even I feel like when you succeed as a trader, that aspect really disappears. Like, yes, you're making a lot of money, but you don't even tell people, you know, me, I do this, so come and do it with me, or join me, or
Yes.
You just make your money and you relax.
True.
You've matured in the game.
Yes.
I want a story. You just live your quiet, comfortable life.
Yeah.
Period.
So you're hinting early retirement. You're going into silence.
But then there's that question where they
I'm
ask,
going into silence.
do you think you're ever going to quit trading?
No. That
Okay.
one, I'm
So
already-
lifetime.
A lifetime.
already
Nice.
deep in
So
it.
you'll be 60 with wrinkles, unafinya tu bado hiyo.
Warren Buffett
Hata
is
70.
90.
Yeah,
Nice.
nako 93.
And
George Soros
he's
ako
CEO.
91.
Is the sole decision maker.
Maker. So,
Okay.
that one I never stop.
Okay. Nice.
Playing in the stock market.
When
I
Buffett
don't think-
dies, that stock is going to go down kidogo.
Yeah, okay,
Guarantee. Decision maker.
Yes.
But anyway.
But not as aggressively probably as I'm doing it now. Maybe
Not
the
as
style will
aggressively.
change.
Yes.
But playing
Not
the stock
style.
market, that's how I look at the world nowadays. I can
Jesse
only
Livermore.
look at it from that.
Jesse Livermore did it to his death.
Yeah.
He killed himself.
It's hard to stop this thing, honestly.
Yeah.
Past some
You've read
point.
Jesse Livermore's story?
No, I'm not so sure. I've been doing less reading in the past few years because the markets were really, slapping me. But I think now I've got to a point where I can.
No, we'll share with you.
I can
Do you
read
prefer
more.
reading physical or online?
I prefer reading both. I can buy
We'll
the
share
copy
with
or I
you.
can still have the copy online.
We'll share with you that book. That's one book Ken and I tell every trader must read.
Yes.
It's a good
Ken
book.
introduced it to me. Just see the ups and downs. He used to trade in the early 1900s.
Started doing
That
at
guy
12.
was
At
ahead
12?
of his
At
time.
12.
Damn.
He
In
made-
1929, he was the
I think
richest
he was the
man.
first trader to be a billion.
Yeah.
Yeah, he was the
Equivalent
first
to
trader
Alikuwa na
billion.
trade siku za
A billion.
siku za World War.
1920s.
Hizo siku si ndo kulikuwa na World War.
1929.
How was he maneuver
Crash.
there? Because the emotions already high.
And that was crazy. That
Yeah.
was crazy.
Hey.
So for anyone else who's not read that book, we advise, at least for traders, know some.
I will have fun reading that.
Other book is fun.
Okay,
It's
okay.
funny.
Especially from trading. You'll see all your mistakes there.
In that book. Okay.
And he shares some strategies as well. So just go through it. It's called Reminiscence of a Stock Operator.
Yeah.
Yeah, Jesse Livermore story.
Okay.
So guys, allow us to end it there. Like I always say, stay woke, stay financially literate. We'll see you on the next one.